So many of you guys are still getting this wrong and refusing to trade with the trend. So in this video, I'm going to show you exactly how to trade on the 5-minute chart, scalping using a free indicator to help you get your entry as well as set of rules that you need to follow for every single trade. Let's get into this video. So for this video, we are going to be using a 5-minute time frame on British Pound Japanese Yen pair. As you all guys love this pair, so we're gonna see how we can use this simple 5-minute scalping strategy with one indicator that will help you get your entry at the exact point, and it has over 90% winning ratio. So on the 5-minute time frame, the very first step is we need to find the break of support and resistance structured areas. Now in this example right here, we have a support right here. Market broke it to the downside and ended up creating a lower low. Now when the market breaks a previous support and resistance structure, in case of sellers, the market will break a strong support level to create a lower low. As it is happening on the 5-minute time frame, we also need to see whether the overall trend of the market is for the sell side if we are interested in taking the sell, or whether the overall market trend is for the buy side if we are interested in taking the buy. Now in this example, as we are in the seller zone on the 5-minute time frame, because we have broken the previous strong support level, created a new lower low which is right here. So we know that we are in the seller zone, but we have to confirm whether the overall trend is also for the sell side or not. So to do that, the second step is we need to go to 1 hour time frame, and we just need to find where is the overall market is heading. Now on the 1 hour time frame of the British Pound Japanese Yen pair, we can see this was the area that we were looking at on the 5-minute time frame, but the overall 1 hour time frame is also going for the downside for a very long period of time. We have been creating lower lows and lower highs, and market is heading towards the downside overall. And if we look here, the very recent movement that we have got is also the sellers movement. We created a lower low, then market made a lower high and ended up making a new lower low. So definitely the overall trend is for the sell side as well. So we first have to find the break of structure area on the 5-minute time frame. Now we have found that on the 5-minute time frame, the market broke the previous strong support level and ended up going to the downside to create a new lower low. Then the second step is we need to go to 1 hour time frame to see whether the overall market is also for the sell side or not. If the overall market is dropping on the 1 hour time frame, that means there is a high probability that on 5-minute time frame, after we will get a pullback, which I am going to show you what kind of a pullback we need and from where we can take the entry. So the probability is that after we get a pullback, market will continue its movement to the downside in case of sellers, and market will continue its movement to the upside in case of buyers. On the 5-minute time frame, this was the sellers movement that we saw, a very recent sellers movement on the 1 hour. So we know that we have broken this previous strong support level and we have created a lower low right here. So that means after we have created a lower low, market has started to make a pullback. Now before the market starts to make a pullback, we also need to identify where is the supply zone. Now here in this example, we have a very miniature supply level right here, and it has to be above the support area in case of the sellers. And when we will look at the buyers example, then we need to look at demand zone, and demand zone has to be lower than the resistance area. So supply zone has to be higher than the support area, and the demand zone has to be lower than the resistance area. So we can expect the market to come to this supply zone as a pullback, so we can look for the trade opportunities. Now for us to have the confirmations, the confluences that the pullback is officially ended and the sellers will continue their movement, we are going to need one indicator which is called moving average. And once we will add the moving average, we have to change the settings of the moving average, and we have to put 20 length inside this setting. So we are going to be using 20 period moving average to have confluences when the pullback will be completed and the market is going to resume its trend to the downside. So far, we have done 4 steps. We first found the break of structure area on the 5-minute time frame. Then we saw the overall trend of the market on 1 hour time frame. Then we moved back to 5-minute time frame and we identified the supply zone in case of sellers. The fourth step was to add the indicator which is moving average, and we added it 20 length in the settings of the moving average. Now the next step is when the market will start to make a pullback to the upside, the market must come above the 20 period moving average. And when it will come above the 20 period moving average, we will wait until the market will go to the supply zone, and we're gonna wait for double rejections at the supply zone. And after the double rejections, the very last step, which will be the confirmation for us to take the trade, the very last step will be that when market will come back again below the 20 period moving average, as it is a sell, then we need the market to go lower than 20 period moving average. That will be the final confirmation after double rejections. That will be the final confirmation for us to take the trade. So as the market is now making a pullback, we can see that the market has started to go higher than the 20 period moving average, and that is what we need. And when we will come to this level of supply zone, we need first rejection, and after that we need a second rejection at this supply zone. And when we will get a second rejection, after that the market must come lower than 20 period moving average. So here you can see that we have just got our first rejection, which is right here. Even though the market it has came lower than 20 period moving average, but that is not what I was saying. After the first rejection, I need the market to come up again, give us the second rejection, which will be a double rejection. And when we will get double rejection at this supply zone, at the same time, if the market comes lower than 20 period moving average, that will be the time when we need to take the entry. So as you can see, now we have our second rejection right at this area. I was saying we need double rejections, and we have got the double rejections. So if we just look at this area from where we got a first rejection, market came back to that area again, we got rejected, and now sellers are coming down. So we need the market to go lower than 20 period moving average, and the moment we will go lower than 20 period moving average, we're gonna place the trade. So here is when the market went lower than our 20 period moving average. So we're gonna place our trade here, put our stop loss above the rejections, and we need to place our target at 2.5 risk reward ratio, which is right here. Now as you can see how well the market made a strong movement to the downside, and we literally hit our 2.5 risk reward ratio in no time. So I'm now gonna show you one more example, but this time for the buy side, so you will be able to understand it perfectly. So here is the buy example, and we can see that we have broken the previous strong resistance area, and market made a strong movement to create a higher high right here. Now we have created a higher high on the 5-minute time frame, but the second step is that we need to go to 1 hour time frame to see whether the overall market is for the buy side or not. So let's go to 1 hour time frame, and on the 1 hour time frame we can clearly see how strong the market is making a movement to the upside. We have been going up, making the moves to the upside with a lot of strength. So this confirms we are with the overall trend. So if we take the buy trade, there is a very high probability that it will easily hit our take profit. So the third step is that on the 5-minute time frame, we have to identify where the demand zone is, and the demand is right here. As we can see, it is also lower than the resistance area that we have broken to the upside. So we are just gonna wait until the market comes to this demand zone, and at the same time we need the market to go lower than 20 period moving average inside the pullback, come to this level of demand zone, makes a first rejection and then a movement to the upside, comes back again, do a second rejection at this area of demand zone, and when we will do the second rejection, then we need the market to go higher than 20 period moving average, because now we are looking at the buy example. So we need market to go higher than 20 period moving average, and that is the time when we are gonna place the trade, because then and only then we will have confluences, double confluences, that market is ready to go to the upside. So let's see how the pullback comes. Now, as the market came to that level, we are getting our first rejection. So what we need, first the buyers movement to the upside, then the sellers to come down to this area again, from where we have got a rejection right here. And when we will get a second rejection, right after that, we need market to go higher than our 20 period moving average. Now here we can see that market is now back again, and we are getting our second rejection at this area of the demand zone. So the moment market goes up and it goes higher than 20 period moving average, that is the time when we need to take the trade. So anywhere we place our trade here, put our stops lower than the rejections, and our target at 2.5 risk reward ratio will be the perfect trade opportunity for us. And this is how the market ended up hitting our take profit. It's very easy to find the overall trend of the market, and we just need to stick to one trading strategy, and that one strategy can give us more than 80 or 90% winning percentage. If we can get that high winning percentage, then that is the holy grail of trading for us, because we're gonna focus on one good strategy, we're gonna backtest it again and again and again, and we will use it to trade in the live market following all the rules that I have laid out in this video. Then you will see the final results. So let me know in the comment section if you guys have any question, and if you guys got value out of this video, make sure to hit the like button, share this video with your friends, subscribe to my channel, and I will see you in the next video. Thank you for watching. Bye for now. Peace out.